Hey, this is Matt from InvestiQuant. Today is Wednesday, May 5, 2021. This morning we saw the markets gap up and then we sold off fairly quickly after the open. The S&P, which is the top left chart here, sold off from the open down to around yesterday's closing price, where buyers stepped in again and they went on to make new highs. You can see the high of the day there, 41.80, and we have started to pull back a little bit, but we're still holding the upper portion of the range. We're kind of forming a daily hammer-like candlestick, and a hammer being with the open and close in the top portion of the range. So that's forming right now, and that's something that we can easily test here and discover. We do have a little bit different price action in some of the other instruments. You'll see the NASDAQ down below is not showing the same pattern. And the Dow is stronger down here in the bottom right, but the Russell has somewhat similar price action there, where the open is near the highs and we are trading back above the midpoint of the session. So kind of hammer-like candlestick forming there as well. But we can test that here and discover. Let me set this up real quick. We'll use all four instruments and use a time-based entry that gets long at 3 p.m. Eastern Time, exiting at the close of regular trading hours, which is 4:15 p.m. Eastern Time. Now for this study, I'm going to use gap direction, gap up. We opened above prior day close. And then to define the little hammer-like daily candlestick that we are currently forming, I'm going to say that the open is in the top 25% of the range, and that's looking at what is the range as of the time of the entry. So as of 3 p.m., what the range is between 9:30 a.m. Eastern Time and the time of entry here, 3 p.m., is the open in the top 25% of the range. Currently, that is true. It's not 3 o'clock yet, but I'm assuming it's probably still going to be true then as well. Next, I'm going to say, where's the 3 p.m. price relative to its range? And I'm going to say it's in the top half of its intraday range. It's not quite in the top 25% right now, but it is in the top half. So I'll add that, hit equals next to close in top half of intraday range. That creates the candlestick formation. And then I'm going to go into indicators, say that we closed yesterday below a 10-day moving average, but above a 200-day simple moving average. Now I can click view results. And here we go. Here are the results based upon entering the market long at 3 p.m. Eastern Time, exiting at the close, which is 4:15 p.m. Eastern Time. When you gap up and then you have a hammer-like candlestick that is forming based on the description that I have added here, as the open being in the top 25% of the intraday range and the close in the top half of the intraday range. This taking place below a 10-day simple moving average, but above a 200-day simple moving average. Now, historically, the S&P has 63 samples here, dating back to 2003 for this pattern. The NASDAQ has 58, the Dow 52, and the Russell 65. The win rates on them are neutral to weak. So you've got the S&P and the Dow with weaker win rates, both of those very similar, around 41, 42%, whereas the NASDAQ and the Russell are a bit more neutral. NASDAQ coming in 52 and Russell 54% respectively. Now the average win, average loss on this, the S&P, which has the weak win rate at just 41%, also has a larger average loss there as well. For the NASDAQ, which is more neutral, the average win has been larger. The Dow, which is also a weak win rate, the average win has been larger. And then pretty similar size there for the Russell. So Russell showing pretty much no edge whatsoever there. But the S&P, for whatever reason, has been quite a bit weaker than the others there. If you look at the equity curve, and the win rate is very similar to that Dow win rate, both of those coming in the low 40 percentiles. So hopefully you found this helpful. Good luck the rest of the day, and we will see you tomorrow.